Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
As we saw with some of the last earnings, including Apple and Amazon, tariffs are definitely making their mark on many industries. We've talked about that a lot over the last couple of hours. None more, though, perhaps, than the auto industry, as we've reported on a lot as well here at Bloomberg. And as Bloomberg's Hannah Elliott writes in this week's Pursuits newsletter, quote, confusion and chaos have reigned since President Trump signed a proclamation on March 26 to implement a 25% tariff on autos and parts imported into the United States. So what's a global automaker to do? Hannah looked into it. She is Bloomberg Pursuits auto columnist, co-host of the Hot Pursuit podcast. It can be found on the Bloomberg, at Bloomberg.com, and wherever you get your podcast. She joins us from LA. Hannah, great to have you here with Emily and me. Big picture, if we can just start there, and then we'll dig into the newsletter, but it all kind of relates. When you have conversations with global automakers, how are they continuing to think about the tariffs, the global tariffs, how they're managing and how they continue to think about their global supply chains and selling in the U.S.?
Yeah, it's been really interesting. And like we've talked about before, it seems like each automaker is doing something slightly different. I'll give you an example. Mercedes just announced this week that they are going to actually be moving production of one of their core segment vehicles. We don't know which one yet, but they will be moving production of that vehicle into the U.S. So this is how they're coping. They're just saying basically, all right, if we're going to be taxed on vehicles we import, we're going to start making more vehicles in the U.S. So that is one example. Ferrari, as we've talked about, has just said, we're going to have a 10% across the board increase in prices. Let's be honest, probably not a lot of Ferrari owners are going to bat an eye at that. In fact, maybe it makes the cars even more desirable. Aston Martin, for instance, has said they're going to stop importing new cars for the moment, put a pause on it, and see how this all shakes out. So again, it's like case by case by case. The main thing that I hear that everybody is saying is just, it's very, very difficult to plan when you don't know what the target is. They would like some consistency and a target that doesn't move, and the target is still moving, which makes it difficult to plan.
Well, but it sounds like Mercedes is at least planning a little bit. Do you know any more details about just kind of like how they're going to do this? Because are they going to build a new factory? And they still have, I'm assuming, many, many different car parts that are all going to go into this vehicle. It just sounds like a lot of, not to have a pun here, but a lot of moving parts.
That's a great question, Emily. The good thing that Mercedes has going for it is it already is established in the U.S. as a major builder. Mercedes has been here for decades. They've got a factory in the South. They have over 11,000 employees that are U.S. workers, plus 400 suppliers or so, all in the U.S. So this is not as necessarily a heavy lift as if they had nothing and then they're just going to decide we're going to build a new factory and do all the things. They're very firmly established. In fact, what Ola Kalinius told me about a month ago when I was with him in Rome is that they consider themselves an American company. And I know that sounds a little bit weird, but considering how long they've been in the US and how many Americans they employ, Ola was really making the case that, hey, we are an American company. Let's not forget, even a company like Tesla, which does have factories in California and Texas, also has a big factory in China. So you kind of get into this question of, well, what is really American? It's a bit of a gray area when you start really counting components and imports and production and all of that.
No, I was kind of impressed by those numbers. I didn't realize first of all, how long, Hannah, and how much that they were doing. I knew they did some, but yes. I didn't realize so much the presence. So they can really say made in America.
Completely. BMW's in the same position. They've got literally I believe 11,000 workers in the U.S. Their plant in Spartanburg has been there for years. They really are part of the fabric, especially in the South, providing a lot of American jobs. So their argument is, hey, why are we being penalized as if we are not putting things back into the country?
Okay, tell us about What's happening in Miami this weekend? I don't think you're going, but you know the plans.
I know the plan. This year I am not going, but of course this is year 4 of Formula One in Miami. It's funny you should mention it. Just this week we spoke with Ollie Behrman, who's the driver for Haas. He's 19 years old. This is his first year in Formula One.
Great.
Haas, of course, is an American team. He's racing in Miami this weekend. It's going to be a really big deal because I just saw that they have extended the deal to keep the race in Miami until 2041. So we're going to be in Miami for a while, and the parties look really extreme. I just saw they've got Tiesto DJing too, so it's going to be a big weekend.
It's quite an event, right? No doubt about it. Hey, listen, before you go, in the newsletter, you also talk about what you've been loving lately. It's actually in our backyard. It's in Brooklyn.
Oh, Wheels of New York.
Yes.
This is my favorite car show that I've been to in a year at least. It was so cool. It's Wheels of NYC is the Instagram handle. It was a car show of vintage cars, everything from Ferraris to like Grand Nationals, like Kendrick Lamar loves, to Porsches, to Rolls Royces, and the vibes were good. And it was in the Brooklyn Navy Yard. I just had the best time. I loved it. I highly recommend anyone going. They're going to have another one pretty soon. So
it's not a show that I've heard about. I mean, it's been around for a while. No, it's new.
No, it's new. It's niche. This is not a big established. This is like a very grassroots, organic. It's not corporate. It's just people who love cars. And I just love that it was all ages, all races, all different types of people and styles, and everyone was just happy. It felt like a little slice of heaven. It was really great.
Okay, very quickly, you got an email from Porsche. It was a mysterious note. They're building this picture that you have in the newsletter. I don't know if it's a makeup, if it's AI, or it's a real car,
yes.
But it looks crazy.
Porsche likes to tease us with these special projects that they have. The short of it is this. The Porsche 917 is a very famous race car. They actually made one that was legal for the street. And Porsche has sort of teased us with a picture of the car and then sort of saying something's happening in June. Now, we all know, as you know, that Le Mans, this big endurance race, happens in June. So it's kind of like, are they going to be bringing a car back to race? You know, are they making a new one? We don't really know, but I think it could be something road legal that we might see in June, so stay tuned.
Such cool stuff, and it's all in the newsletter that you can check it out. Hannah, thank you so much. Have a good weekend. Bloomberg Pursuit's auto columnist, co-host of the Hot Pursuit podcast. Download it. This is Bloomberg.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Hey, folks, we're going to stay with supply chains. We've got someone who's been following, studying, talking about supply chains for more than 2 decades. We head to Florida. Sarah Barnes-Humphrey. She's an entrepreneur and an influencer, as we mentioned, studying supply chains for a long time. She's founded the Let's Talk Supply Chain brand and podcast. She's also co-founder and CEO of a bid and freight platform called Ships Inc. And she joins us. Hey, Sarah, good to have you here. Before we get into the nitty gritty, tell us about your studying of supply chains for the past 2 decades, because it's obviously a super timely topic today, but I don't know that everybody cared so much a few decades ago, maybe during the pandemic, but not necessarily 20 years ago.
Yeah, no, they definitely didn't. Thanks for having me on the show. So I've basically been talking about supply chain at the dinner table since I was 9. My parents owned a logistics company, and I worked in the family business, operations and sales, and then ended up founding our media business, which is Let's Talk Supply Chain. So podcasts and live shows and all sorts of things.
Okay, so let's start high level. How are global supply chains looking in the here and now? There's a lot of fear about what tariffs are going to do, but in the here and now, what are you seeing?
Yeah, so I was at a conference last week and there was a lot of optimism. It was a breakbulk conference, but I do know there's a lot of uncertainty. There's a lot of supply chains being redesigned. I think the mindset is going from what are the challenges to what are the opportunities? How can we design our supply chains? What does that need to look like? Some examples I've seen recently. So Apple, a couple of years ago, they moved their production or their manufacturing, some of it into India. And they did that because they wanted to use India as a new consumer market for them. And it's really paying off today because they're going to be able to produce iPhones in India and skirt some of the tariffs in China to be able to bring iPhones to the US as well. And there's a couple of other examples where, the electric vehicle maker Polestar, they've paused their annual forecast and they're shifting manufacturing to the US and Europe, whereas Aston Martin is limiting exports to the US. So I think everybody's just sort of taking a look at how do we want to spend our risk dollars? What does that look like? And what do we want to do right now?
Well, I think about all the globalization everybody's been pushing to over the last few decades. Like that was the way to go to the low cost producer, go to the countries that could do it the best. It just kind of made a lot of sense. Do you think that's over?
No, I don't think it's over. I think people are waiting and seeing. I think a lot of retailers were able to get product out before the tariffs hit. Some retailers are going to get hit with the new tariffs, but I think there's a lot of organizations that are pausing orders right now, which is a bit of a problem, right? Because if we think about it, we're going into peak season. And peak season is where retailers and organizations are bringing in products for holiday season. So depending on how long this is going to go will determine whether they're going to turn on manufacturing again and whether they're going to order those products for holiday season. So we might not actually see some of the effects for another 5 to 6 months when people are starting to shop for holiday.
How is shipping looking right now? Because there were a few analysts earlier in the week and even the week before who had started to flag shipping data that cargo shipments are slowing, and then that's going to mean that we're soon going to see shelves empty because trade is just going to stop. Are those fears overblown?
No, I don't think so. The Port of Los Angeles came out with a stat that said that they're going to see a decline of 35%. And they're also looking at every fourth vessel not stopping at the port. And so what's going to happen is not as much cargo is coming in. And so the shipping lines are actually going to start charging more for container shipping as well. So not only are we going to have higher costs for goods, but we're also going to have higher shipping costs on container shipping because those vessels, those steamship lines, they're not going to want to lose money either.
Do you think, I don't know, I think about the negotiations between U.S. and China, or whether or not there really is any negotiations, right? I mean, do you think when all is said and done that we're going to find more reasonable trade deals created and it will go back to kind of somewhat business as usual, or no, things are going to change dramatically going forward?
So I'm not sure. I think at this point, nobody really has a crystal ball for that. I mean, if we think about what has happened
do companies that you talk to or that do they think it's going to go back to more of kind of business as usual, or they're not quite so sure?
They're not quite so sure right now either. I think everybody is sort of in a wait and see type mode at the moment. With the changes that came in for Shein and Temu today, we're seeing $80 shipments that now has close to $69 in shipping and import charges. So these are the types of things that until it happens, we're not entirely sure how long it's going to stay and what that looks like. And so how do you plan for that? So a lot of forecasting and planning is really hard at the moment. And so supply chain teams have a lot on their plates right now.
I'm also wondering, you talk about manufacturing. Do you think this idea that, companies are going to be able to bring the manufacturing to the U.S., build factories here, is the supply chain in the U.S. equipped to handle, what could be an influx of a ton more domestic manufacturing very quickly?
Yeah, I think that's a great question. And I think there could be room for some. I'm not sure we can do it all in the US. I think there's a number of different factors. There's some labor factors. I saw somebody the other day talking about how machinery into the US because of the tariffs might be more expensive as well. So I'm not sure we can necessarily equip those facilities with the machinery that we need to manufacture either. And also, it takes a long time to be able to set up manufacturing in a new location. I mean, if you take that example of Apple that I mentioned earlier, it's taken them a couple of years to shift some of that manufacturing into India, and it's paying off today because of the tariffs. But at the end of the day, it's a really long-term play. And a lot of people were moving to Mexico, and now they're unsure how that actually fits into their manufacturing cadence as well.
That's what's fascinating, Sarah. And I think this is something that we talked about a lot after COVID. We would have just even architects or developers coming in and saying, you know where there's a lot of activity? Mexico, because people are moving operations to Mexico. And coming off of COVID, we realized how vulnerable our supply chains really, really were, and that we wanted stuff closer to home. And so that shift already started happening. I mean, what is going on behind the scenes? Even with Apple, you mentioned India. We have talked with our Mark Gurman, who covers that company flawlessly and in depth. And, we've been having conversations how Apple was spreading out its supply chain, but still so reliant on China, still is. But then, bam, it was like, well, wait a minute. We can next year have all the iPhones that are needed in the United States come from India. So I feel like there's stuff that's been going on very quietly. What are you hearing about what companies are doing quietly as they continue to maybe spread their supply chain around?
Yeah, again, I think they're looking at the design of their supply chains. Where do I want to spend my risk dollars? Where can I actually source the components that I need to be able to create the products that I need? Just another mention on Apple, they looked at manufacturing the iPhone in the US, and it would cost the US consumer $3,500. Yeah. So there's a lot of conversations. We would not be buying the phone.
Yeah.
Right.
I mean, three phones in my household, and that's what, almost $10,000? That's a lot. All right, go ahead.
Yeah, no, I just mean it's different for different organizations, and supply chains look different across the board. And so for some, manufacturing in the US makes sense, especially for medications and chips for technology and things like that. What you were talking about coming out of the pandemic, those are the things we want to manufacture close to home. But for some organizations, it really doesn't make any sense. Taking that Apple example, at $3,500 for an iPhone, nobody's going to spend that kind of money. So I think it's a bit of a push-pull. Everybody's having this discussion. They're looking at the design. Where can we source? Where can we purchase? Where can we manufacture? What makes the most sense for us and for our customers?
Sarah, what are you seeing from small businesses? What are the particular challenges, someone who's in the U.S. is going to face if they're a small business?
Yeah, I think if they're a product-based business, they're sort of rethinking what it is that they want their business to look like. I was recently reading an article about there was a bunch of small businesses that were sort of looking at the tariffs and saying, we want to be exempt from it. And one of those small business actually said they're going to pivot from products into services because that makes the most sense for them right now. And I think back to the pandemic, and some small businesses pivoted what product they were actually selling, and some went into hand sanitizer. So I feel like this is kind of a similar thing at the moment that small businesses were faced with during the pandemic.
All right. So when you kind of watch, like probably all of us, the news coming out of certainly the White House, and then just kind of what you are hearing from folks in terms of managing their own supply chains and what you're seeing, I don't know, how are you thinking about the next 6 months or so?
I think that it's going to be very unpredictable. I think that it's extremely uncertain right now. And if retailers and organizations are pausing shipments at the moment, I don't think we're going to see the ripple effects for another 5 to 6 months. And I think we may see some challenges over the holiday season. I think organizations are sort of in a wait and see, right? And I just don't think that anybody has the answers right now until we figure out where those tariffs are going to land.
Well, and right, as you said, and we kind of kicked off in the 2 p.m. hour talking with our Mike McKee, who follows the economy and talking about the jobs report. And it looked like things at this point are doing pretty well. But the concern is when this data starts to hit, whether it's consumers, we've seen it in sentiment, but when it comes into the actuality of it, I am curious, are you thinking a recession is likely too from the conversations you're having and the people you're talking to?
I'm not sure. Everybody's kind of all over the map. Some have said possibly. Some are saying we might not. I think it's too early to tell, to be perfectly honest with you.
Okay. Yep. That's why we're on pins and needles. Not today. Everything seems awesome today. Gonna leave it there. Hey, Sarah, thank you so much. Good to meet you and talk with you. Sarah Barnes-Humphrey, founder of Let's Talk Supply Chain, joining us there from Florida.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
So we talked about last week, Amazon and Apple, both noting kind of how their businesses were affected by tariff and trade policies. Amazon going so far to note that recessionary fears and global economic and geopolitical conditions are in their forecast. Another company that's got a great read on the consumer is Wayfair. They reported earnings this week. They came in better than expected as consumers brought forward spending while suppliers are holding back from price increases. We caught up with Wayfair CFO Kate Gulliver. We talked earnings, business, the outlook, and how the U.S. consumer is doing.
To your point, we had significant pull forward in the category in the COVID time, right? So in the sort of 2020, 2021 time. Since then, the category has been down consistently since then. The category itself is actually below, starting to be below 2019 levels, right? So we're seeing a category that has historically been, over the last few years, quite depressed, which may be different than, some of the other consumer discretionary categories that folks are referring to. That said, yes, it's absolutely an uncertain environment.
All right, everybody take a shot, because every time we hear uncertain, that's it, David. Like, that's
the word of the year, I think I can safely say.
Totally. All right, that's Wayfair CFO Kate Gulliver. Hey, let's get more into what CFOs are doing in this environment. The conversation she's been having with members of the CFO suite. Nina Trentmann is senior editor at Bloomberg News, author of CFO Briefing newsletter. You can find it at bloomberg.com/CFO-briefing. A new one comes out on Sunday. How are you?
Thank you. Yeah, I'm good.
It's good to
Thanks
have
for having me.
Well, I'm curious, the CFOs that you talk to, how are they feeling? Are they good? Are they saying uncertainty or uncertain times a lot in conversations? What are you hearing?
Yeah, uncertainty is probably the number one word, which sometimes is made harder by the fact that we aren't supposed to be writing it so often, given that, well, what does it actually mean? And also, we've heard it a lot during the pandemic. She mentioned it. And so the question is, of course, well, how do you navigate that? Of course, we need to give CFOs also a bit of a pass, given that there's so many variables within their equations that they just don't have any information about, tariffs being one of them, whereby sort of, yes, it's fair to say that times are very uncertain for CFOs right now.
You have these two variables, and of course they're related. The first is uncertainty, again, I say it, about the kind of broader economy and the trade picture. And the second has to do with just the market volatility we've seen. How is that impacting the appetite for deal making among CFOs? I mean, going back to the campaign and the election, there was this promise of the deal market opening up, and there was going to be a huge swell of them. Hasn't come to pass. Are deals getting done?
Some deals are getting done, yes, but we haven't necessarily seen this huge rise or surge in deals that people were expecting, because the deregulation that people were hoping for so far hasn't really happened, and instead there has been a lot of stuff that is not necessarily very conducive to deals, tariffs, volatility, market volatility, and so I think for certain deals, yes, they're still going through. For example, Conagra this week announced a divestiture where they're selling one of their brands to a PE firm. So those deals get done, and I think they're assuming it's going to be done in the next few months. So not necessarily a big challenge for them. But I think then also we're seeing that some deals are sort of hitting the brakes. I know deals involving China, involving other countries. So I think bilateral deals and even multinational deals are very tricky these days.
Yeah, it's interesting. I feel like we've been all talking about, especially the private equity guys, right? The private world, just waiting for the environment so they can kind of start selling stuff or things to go public so that they can kind of either return money to investors and move on to new deals. Having said that, always love the different CFOs, that you talk to, different areas of our world. Tell us who you've been talking to. You mentioned Conagra, but who else have you been talking to and what they're saying?
Yeah, so this week we spoke to a few CFOs. Conagra was one of them. Then we spoke to the CFO of Holcim, which is a Swiss materials.
Concrete stuff.
Yeah, concrete maker, correct.
I love it, right? It's like the core of so much.
Right, and then also a few other CFOs, including S&P Global. Interestingly enough, those companies are amongst the companies that are saying, okay, well, actually, yes, the environment is tricky, but still we want to pull ahead with our deals. So Holcim is in the process of spinning off its US and North America business. Something that had started a while ago, so it's not something that they triggered recently, but they're expecting that spin to take effect in May or in June. And I asked them, well, are you going ahead with it? Isn't the market volatility a tricky thing, given that you're planning a spin-off? This involves, to some degree, markets have to be conducive. You don't want your shares to sell off on the day that the spin takes effect. And they were saying, well, no, the strategic rationale still is very much true and holds. And therefore, yeah, we're pulling through with the deal, and we're not necessarily pausing it. Interestingly enough, they're also pointing out that the dynamics in their business in North America versus in Europe are very different, where they were saying, well, in North America, we have a lot of construction spending, and in Europe, we are focusing on decarbonization, for example, less CO2 heavy concrete, as you pointed out. So they were saying basically it makes a lot of sense for these businesses to be separate. And so they think to some degree that the tariff tensions that we're seeing right now and the divergence between the US and the rest of the world might actually be sort of like to some degree a supporting factor for this spin-off, which was interesting because my assumption was that they would be like, oh yeah, well, timing isn't great.
I think it's funny, right? Strategy sometimes or fundamentals still matter.
Yeah. I'm curious, in the minute we have left, how persuadable these CFOs are. So I know you talk to folks at advisory firms as well. What's the message that they're conveying to CFOs just about whether or not to move forward with deals or to pause or to reconsider them?
Of course, advisory folks, to some degree, always, when they talk to us, they want to talk their books. So
yes,
to some degree,
course.
what they tell CFOs is different than
Wait,
what they tell us.
No, just kidding.
But they've certainly told me that they have a lot in the pipeline and they see a lot in the pipeline. I think what they are also telling their clients that they work with is that, well, you need to really do scenario analysis here. You need to sort of really work through, okay, well, what are your assumptions? What do you think is going to happen? And how will the deal work in a different environment? Just mentioning tariffs, for example. And so I think they were saying that select deals still go through, that it's a case-by-case basis, industry-by-industry basis. But I think they were all hoping for more certainty as well. I think not just the CFOs, but also the deal advisors would look for that.
That's what's kind of wild, I think, in this environment. Ardina Martin-Adams, too, just saying, I don't think I've ever seen a company come out and give you two, earnings scenarios of could happen this way.
A or B, pick your pleasure here.
Right.
Yeah.
Possibly recession, so then not so good. Things go back to normal. And I think it's just this scenario-led environment. I think companies do it all the time, but this is like amped up in a big way.
Yeah, and also we're seeing sort of, if you look at the guidance that companies are putting out right now, of course, we've seen a fair amount of companies pulling guidance.
Yeah.
Or we are also
Which
seeing...
that I get. Like, okay, we can't give you an outlook, but when you give like a couple of scenarios is wild.
Or we've also been seeing, of course, companies widening their guidance, which then also gives them more room. To some degree, it's understandable. Then also, if you look at it from the analyst perspective, like companies that withdraw their guidance, that's basically for any analyst very difficult to then work with in terms of factoring models. But
got to figure it out,
I guess
right?
we're all coming to the same question of not knowing what's going to happen.
There you go.
All right. Dare I say it? Uncertain.
No,
Okay.
there you go. You said it.
Take a swig, everybody. Nina, thank you so much, as
Good to
always.
see you.
Nina Trentmann, senior editor of Bloomberg News. Check out the CFO Briefing newsletter. Comes out on Sunday on the Bloomberg and at Bloomberg.com.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, time now for Drive to the Close with Alexis Browne Roberts, COO at Alexis Investment Partners, with us from Montgomery, Texas. And she's joining us right now when the S&P 500 is on track for its longest streak of gains since 2004.
Feels like a big deal.
It feels like a big deal, but let's see what Alexis thinks. Is this a sustainable bounce off of the lows, or are these gains just going to reverse soon and then next week we're going to be talking about how there's so much red?
Exactly.
Well, hi, Carol and Emily. It's great to see you again, Carol, and it's nice to meet you. Thank you both for having me on. And that really is a million-dollar question right now, isn't it? It's what investors are all asking each other themselves. But we think it's sustainable. I mean, we came into this year expecting a very volatile but overall positive year, although admittedly a little bit of a different path. We thought we were going to be more positive in the front end and then have this volatility in the back end. Looks like we're flipping that around, but we do see this as being sustainable. I mean, earnings are still doing well, and honestly, there's a lot of cash on the sidelines, and we really do think
All right, wait a
hit our
minute,
bottom back in
Alexis,
April.
I have to stop you because what's interesting is you say earnings going well. Amazon, Apple, massive companies, massive weightings in the S&P 500, the NASDAQ 100. We talked with our Eric Weiner about this, that it is unusual, especially Apple. You know, often so goes Apple, so goes the market. And that to see kind of broad-based buying, but these two names down substantially because of the worries, the big worries that is really the overhang of the overall financial U.S. market. That's not odd to you. And also that retail investors are really buying, but it's not necessarily the institutional guys. So like, how does that factor in to, you know, your outlook? You're optimistic, but doesn't that kind of concern you a little bit?
Their earnings were actually strong. If you look at the numbers, they did well this past quarter.
But that's
that's concerning investors is the guidance.
Right.
Right. But it is since, we've been living with tariffs for 2 months now. So it has been since Liberation Day, as they like to call it. But the guidance going forward is really what's worrying investors. I mean, honestly, with the amount of uncertainty right now, why wouldn't CEOs be saying, hey, this is an uncertain environment and kind of trying to tamper down expectations? I think as investors, if we didn't hear CEO say, we'd be taking a step back going, hold on, are you not seeing what's happening? So yes, absolutely, there's uncertainty. There's reasons to be worried. But honestly, those names, they were beaten down a lot because they had just been the leaders so strong prior to this move. When you're looking at things like productivity, AI, they're going to be good again. And even more since then, we actually did buy into these bigger cap tech names once we had this pullback because they had been valued much higher than they were now. And when you have an opportunity to buy these names at a more reasonable valuation, I mean, you might as well. At the end of the day, NVIDIA is going to do better than Coca-Cola. Nothing against Coca-Cola, but just their earnings potential is higher. And if you can get a more similar PE between a big tech name versus a stables name like that, I would rather do it. So that's my view on the tech names there. I think they've been beaten down. They're going to participate more in this recovery as we've been seeing. Tech has really been participating in this recovery. Now, once we're fully recovered, will we see a broadening of leadership, potential rotation of leadership? Absolutely, and we're watching for that. But here, we'd rather be owning those names. And we took the opportunity with this dip to add to those names in particular.
Right. So I see your overweight stocks, but you also said in your notes that you're still hedging with gold. And I'm wondering what risks you're hedging for, and then what would have to happen for you to add more gold?
Yeah, so we are overweight stocks as well as we do hold our largest position is in gold. Now that's still just under a 10% position. It's about a 9% position. And really that's an opportunistic diversification, I would call it. It's not like every time gold goes up, stocks go down or vice versa. It really moves differently. And you see these large swaths of time where gold does really well and then swaths of time where they go lousy as well. But right now is one of those times where we really do see gold as performing well. We originally bought it as an inflation hedge, and that was a good decision on our part. Now we're really holding it as a more of a geopolitical risk hedge, not just from a geopolitics standpoint, but also from there's a lot of different moves being made all across the world from all the central banks. So also from a policy risk standpoint there as well.
What about overseas interest and allocation and buying?
Yeah, it's something we're definitely watching, and we are interested in potentially moving into foreign, but that again will probably more be after this recovery, once we look to see more of that broadening of leadership and potentially that rotation of leadership. Foreign was doing definitely interestingly this year. But I think if you hop into it right now, you have that potential to really get whipsawed. And we didn't want to do that when some of these great tech names and other names had gotten beaten down and were more likely to participate in this recovery first. And then potentially we'll see that rotation into foreign leadership. And that's when we would be more interested in getting in then. So we're just being a little patient to avoid that whipsaw, but it is definitely on our radar.
Yeah, I would just point out, I mean, the Eurostoxx 50, I know it's been beaten up and maybe not as up as it was earlier this year, but it's still up about 8% year to date. And that compares with still about a 3.5% decline in the S&P 500. So, you know, betting overseas has still been pretty good this year.
Right, this year. But in the longer term.
No, I know. But, you know, when you're...
Yeah. Well, Alexis, we only have like 45 seconds left, but I'm just wondering, what's the general vibe you're getting from clients? Are people panicked? Are they asking to go to cash, gold, or are people more optimistic?
We're really lucky with our client base. They've been through markets like this with us, and they've seen really that it's really difficult to have to go through moments like this. But if you think about it, most of the time you're hearing investors say that you want to buy low. Now that's really hard to do when you're emotionally charged. And luckily our clients trust us enough that we've had some who are nervous, who we just need to talk to, and then they wind up being fine. And some who actually want to send us more money so they get it more invested right now.
Yeah.
But really how we aim to make money for our clients is by Sorry, what?
No, we got to run, unfortunately. But thank you. Always glad we can check in with you. Forgive me. Alexis Browne Roberts at Alexis Investment Partners.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.